Internal Revenue Service IRS tax news. Here's how saying, quote, I do, end quote, can affect a couple's tax situation. Do have to put a quick disclaimer in before moving forward, and that is when saying, quote, I do, end quote, both the question asked and the context do matter. In other words, if you were to say I do just in your office or in your living room or in your living room office, it may not have the same impact as will be applied here. So keep that in mind as we move forward. IRS Tax Tip 2021-82, June 9th, 2021. The arrival of summer is also the start of wedding season. Marriage changes many things, and taxes is one of them. So when you're doing the wedding planning, obviously the tax planning related to it's going to be at the top of the to-do list. I mean, why else would you even get married unless there was a tax benefit related to it? I'm just kidding on that. But in any case, newlyweds should know how tying the knot can affect their tax situation. So there can be significant tax implications in situations that will be involved when a couple gets married. That's a significant change on the taxes, so you want to be aware of that. Normally, the tax code will be set up in such a way that being married will not be a detriment. That's what the goal should be, in my opinion. It shouldn't be a detriment to get married, and there could be benefits, of course, to the filing status of married filing joint. However, there are situations, and it gets quite complicated, especially when you got these refundable tax credits that are coming into play, and the earned income tax credit, child tax credit. These kinds of things greatly complicate the kind of combining of the tax return to come up with a situation where the couple will be basically even or better. So you could end up with situations, in other words, where filing single for the two individuals end up with a better tax situation. So you do want to keep those kind of things in mind and be aware of them. They shouldn't be, I don't think they should be the driving factor, of course, in your marriage planning and whatnot, but they are things that you want to keep in mind because they could be significant. And note that once married, then of course, from a tax standpoint, the traditional idea of the married couple from, the IRS standpoint would be that you had two entities that are now one entity for taxes, right? So now you're going to file one tax return with the two people on it, which could well have multiple different income streams from the two people filing on the one tax return. So that's going to cause significant changes if the goal of the IRS was to come up with a situation where you basically have a steady, even place where you're not having a detriment to get married. And those types of things would have to be things like increasing, the standard deduction, adjusting the tax rates so that when you're looking at the progressive tax system, you're not at a disadvantage because your income will be higher. So they got to adjust all the tax rates basically for the progressive tax system, and all the income phase outs and whatnot that will take place have to be basically adjusted as well. Also note that you do not have the option generally when married to say, I can either file single or marriage. You might think maybe I should be able to file one or the other. That's not generally the case. Once married, you can't really jump back to single or head of household. Your options at that point of time are married filing separate. Remember that married filing separate is much different than single or head of household filing statuses, and the IRS will often limit things, especially things like significant credits that are refundable credits for people that file married filing separate, because they're skeptical of people taking advantage of the system by doing that, by being able to kind of game the system, taking advantage of the income limitations that are involved, especially with some of these refundable credits. So you do want to be aware of kind of the tax implications. They can be significant when you get married. So here's a tax checklist for newly married couples. Name and address changes. Name. When a name changes through marriage, it is important to report that change to the Social Security Administration. Name on the person's tax return must match what is on file at the SSA, Social Security Administration. If it doesn't, it could delay any tax refund. So when you have a name change and you file the tax return, you will confuse the IRS if the Social Security number does not line up to the name when filing the tax return. And once the IRS is confused, I always say this: don't don't confuse the IRS, because once they are, it'll slow things up, of course. And if you're waiting for a refund, then that slowing process will be a problem. To update information, taxpayers should file Form SS5, application for a Social Security card. It is available on SSA.gov. There's a link to that here, or by calling 800-772-1213, or at the local SSA office, Social Security Administration office. There'll be a link to this in the description if you want to look up that phone number here, so you can take a look at the description. Address: if marriage means a change of address, the IRS and U.S. Postal Service need to know. To do that, people should send the IRS Form 8822, change of address. There's a link to that here. Taxpayers should also notify the Postal Service to forward their mail by going online at USPS.com. There's a link to that here, or their local post office. Withholding: after getting married, couples should consider changing their withholding. Newly married couples must give their employers new Form W-4 employees withholding allowance. There's a link to that here within 10 days. Now note, when you get married, there's a significant change to your income levels. And if you have, especially if you have different kind of income levels, like one of the spouses earn more money than the other spouse, then when you combine the income together, hopefully the IRS will kind of adjust the tax rates so that it won't be a net detriment to getting married as to being single. But again, the person that had the lower income in that situation might not have the access to some of the credits they may have had before, some of the child tax credit, some of the earned income tax credit, these refundable tax credits. So that's where it gets kind of weird in terms of how beneficial it could be to get married. And you can actually end up with a detriment to get married, which I think is not good from a policy standpoint. But, it is what it is. But in any case, that it means that you got to kind of you got to figure out what the withholding should be then with the combined income, and just realize that if you're the person that has a lower income, then your net tax rate will actually be higher due to the combination. And you got to figure out between the two of you, how to divvy up the tax situation, because it's usually beneficial to file married filing joint. And then you got the question of, well, how should we be divvying up the tax obligations versus the home obligations and whatnot, and work that out, considering the fact that you got the joint income in place. And then, of course, once that's figured out, you need to talk to the employer and file the W-4, knowing that you can't really get advice from the employer itself, because the corporations, although they're required to withhold the taxes, generally are not going to want to give you tax advice because they're scared of getting sued. So you got to kind of figure that out on yourself, and then figure out how much to withhold on the W-4, and then give that to the employers. So if both spouses work, they may move into a higher tax bracket or be affected by the additional Medicare tax. So you could have this Medicare tax implication, and you could end up in that situation where you have a higher tax bracket because the incomes are together. Again, hopefully the goal is that the tax brackets will also be changed versus a single or head of household tax brackets, because you have these progressive tax brackets. And when you put two people together, then you would like to have a situation where the outcome for taxes amongst the both of them would not be a detriment to them as if they filed single. So generally they will change, but you have to be aware of that, and you got to be aware of those discrepancies between the two, and then figure out, well, who should be paying more taxes based on, what each of you are doing within the relationship and whatnot. And that's, just what you got to figure out. So they can use the Tax Withholding Estimator. There's a link to that here. Great tool, the Tax Withholding Estimator. You kind of need software to figure these things out, because the tax code is getting quite complex. It's changing all the time these days. They're changing it a lot with all the things that are happening. So it's not stable. So you kind of need a projection tool that helps you to kind of project into the future. And you can't really rely on last year's return, because last year's return you weren't married, so you can't really tell what happened from last year. So you need to do an estimator. Software can help you with that. This Tax Withholding Estimator is kind of like a software tool that helps you to project into the future. It's pretty good if you don't have any other kind of software to do that, and you can get an idea of what should be there and get your withholdings in line. So it can be found at this link. There's an IRS.gov here. You can find it on the IRS website to help complete the new Form W-4. Employers should review Publication 505, Tax Withholding and Estimated Tax. There's a link to that here for more information. Filing status. Married people can choose to file their federal income taxes jointly or separately each year. While filing jointly is usually more beneficial, it's best to figure the tax both ways to find out which works best. So remember, once married, you can't jump back to married filing to single or head of household. And that's, you got to really understand that, or else it can kind of, if you think that you can kind of go back and forth, it can be frustrating when you do your taxes and realize, well, you can't do that. You got to, realize that once married, you no longer have the option of filing a single or head of household. Now, why would you want to file single or head of household if married? It could wind up, like I say, in weird situations, some of them being around those refundable credits where it could be beneficial. Once married, then you still have the option to file married filing separate if you don't want to file married filing joint, but married filing joint is usually going to wind up better than married filing separate, and married filing separate is not the same thing as filing single or filing head of household as if you were not married. And it will kind of change too on the state regulations. So you got to make sure that if you do file married filing separate, you kind of understand the regulations, and it could be different on the states you're in if it's a community property state and whatnot. So it can be a little bit more complicated to file married filing separate, but you may lose some of the benefits because the IRS, once again, skeptical about people taking advantage of the lower thresholds to take advantage of things like credits. So you might not get the same access to the credits that you would have if married filing joint or if single or head of household, which you, again, don't have access to once you are married. So you could file, once you file, you could kind of figure it out both ways. It's kind of a hassle to do that, try to figure it out if you filed married filing separate and then married filing joint. Most of the time, the married filing joint will generally be a better place to be. But in any case, remember, if couple is married as of December 31st, the law says they're married for the whole year for tax purposes. So from a purely tax purposes planning standpoint, you might, consider this. You might say, okay, is it beneficial for us from a tax standpoint to get married or not, right? And and if it's beneficial to get married, to be married, married filing joint versus two separate returns, then you might, get married before the end of the year. As long as you're married before December 31st, then you're going to be married for the entire year, right? If it's beneficial for you to not be married for some reason, like if you filed separately, you actually would have a tax benefit, but you want to get married, and taxes shouldn't be, holding you back from that. I would think that seems not right. So, but you from a tax planning standpoint, maybe you wait until January, and get married. And then you have one more year of filing with a tax benefit of not being married, and then you get married the next year, maybe. I don't know. So you could take that into consideration. But the idea is, remember, if couples is married as of December 31st, the law says they're married for the whole year. So if you're married by December 31st, you're married for the entire year. Scams. All taxpayers should be aware of and avoid tax scams. Avoid tax scams. The IRS will never initiate contact using email, phone calls, social media, or text messages. First contacts generally come in the mail. Those wondering if they owe money to the IRS can view their tax account. There's a link to that here. Information on IRS.gov. This seems kind of unrelated to our marriage type thing, but obviously you want to avoid scams. Avoid scams. And there's a lot related to the IRS. So if you ever get any messages from the IRS, remember the IRS usually gives you messages by mail. So not usually a text message, certainly not a Facebooky message, face messaging book thing or anything like that. Generally, IRS doesn't do that. Maybe they will at some point, but as of now, no. And so if you have questions about it, though, then you want to go to the IRS directly and then possibly check out your account, and that usually will help you to verify anything. So more information can be found topic below, topic 157. Change your address, how to notify the IRS. There's a link to that here. There'll be a link to the other stuff that we've looked at here, and there'll be a link to this in the description.